right, good evening everybody. It is Sunday night, October 16th, 2022. I hope everybody had a fantastic weekend so far. But now it is time to get back to business, unfortunately. Well, this week is going to be a very, very busy week on Wall Street. We have a mess of corporate earnings. We are going to be hearing a lot of economic data. We're going to be hearing from the Federal Reserve as well. And we're also going to be hearing from the National Association of Realtors. Now, before we start off, let's take a quick look at futures here. So the S&P 500 E-mini futures contract that trades under the ticker symbol ES is up about 13 points. I would even consider it flat to about 3,610. If we look at the NASDAQ 100 futures under the ticker symbol NQ, we're up about 30 points to about 10,774. And then last but not least, the Dow Jones Industrial Average futures, ticker symbol YM. Futures are also up about 99 points to about 29,802. Take a quick peek at the dollar, the Dixie. We're trading at about 112, and crude oil, ticker symbol CL, is at about $86. Quick peek at the bond market or the debt market. That 10-year U.S. Treasury yield is now coming down a bit. Obviously, we were trading above 4% on Friday, but now that the futures market is open, we are below 4%, trading at about 3.992%, and that 2-year yield is down at 4.471%. Obviously, extreme inverted yield curve. So we're going to be doing the market to look ahead stream. We have tons of corporate earnings that are going to be flowing our way starting on Monday with Bank of America, Charles Schwab, BNY Mellon. Now, we already sort of got a head start looking into what the financials are going to turn out to be, because last week we talked about JP Chase, Citigroup, Wells Fargo, as well as Morgan Stanley. Really no surprises. I actually think earnings expectations came in pretty good, being that the circumstances, we talked about as it relates to the investment banks. The investment banking revenue was already supposed to fall off a cliff, obviously with IPO activity down about 99% year over year. But I think the good news is that a lot of the delinquencies and defaults aren't really picking up at a lot of these banks. Now, I think combined out of the top 3 banks that did report last week, so right now I'm talking about JP Chase, Citigroup, and Wells Fargo. I think collectively those 3 banks did set aside a combined $1.56 billion for potential bad loans. So it'll be interesting to see what Bank of America does. Let's see if they also have that similar outlook, trying to hedge their positions in a way. But now let's see who we have in the chat, and let's start off the live stream. I see Otto is here. Good to see you, Otto. Hopefully you had a good weekend. I see Jeremy Master. Hey, the Ellery is here. Says, hey, Tom. Good to see you. It was a beautiful, beautiful Sunday here in New York City. JR says, hola from Colorado. Vinny Castellano, the one and only. Good to see you. Big Task says, hey, Tom, do you work on the weekends? Sometimes. I really took it easy this weekend. I wasn't feeling too good, but I did take it easy. I see Sonia C. Two-Wheel Freedom. Good to see you, my friend. The one and only Dan Zhang and Lonnie. Sunshine After Rain, Grand Street 1. Cynthia Martinez is here. And Austin City Limits. So this is the view outside of the WeWork building. We are here on 31st Street and Madison Avenue. Pretty good view out the window here. But I am going to pack up my bags and we'll head out. Let me just bring you guys back into the office. Close the window and we will get started in just a minute. All right, you're good. Hey, I see Dusty Cole is here. James V, welcome. Good to see you, James. All right, give me a second. I gotta put my cup away. I forget. I always forget to put this thing away before we start the stream. So let's see if we could do that now. So here's a little bit of a look at the office, sort of the WeWork space. We have the interesting stairway to wherever. Give you guys one more look, sort of the common area here. I see Austin city limits. Good to see Austin, Dusty Cole. Always a pleasure. Push to exit. All right, and we're off. Hey, Abdullah is here. Good to see you. Paulette says happy Sunday, Tom. Paul Greenwell. Rich McNillis. Yes, is nice and open. So this is one of the WeWork offices. I think this is my new favorite WeWork. Now, usually I work out of the one on Park Avenue, but did you guys see the news? Hold on, maybe the internet's gonna go out. But there was a big robbery that just happened at 430 Park. So I didn't want to work out of that office today. This is party time. Italy. Maybe we'll head there tonight. I think that'd be a good idea. Let's see. Push to exit. All right. Team, here we are. We finally made it to the ground level. This is East 31st Street and Madison Avenue. It's a beautiful night. I see Lee is here. Says, good evening, Tom. Welcome, Lee. Welcome to the Markets a Look Ahead live stream. So this is going to be a very, very busy week on Wall Street. Obviously, we did kick off Q3 earnings last week. Obviously, starting with many of the big financial firms. We sort of covered JP Morgan Chase with Jamie Dimon, his very famous comments about the quote-unquote financial hurricane that is about to hit the United States. But I think if we really look at the facts, earnings season wasn't too bad for Wells Fargo, Morgan Stanley, Citi, and JP Morgan Chase. Now, I know what you're thinking. Many of you would say, well, look, I mean, revenues were down substantially in the investment banking sector, but that's stuff we already knew. I mean, we've been talking about that on the live streams for well over, I would say, 3 or 4 weeks now. So I would like to say that a lot of that is probably priced in. Now, I would also like to say, I'm not sort of making a bullish thesis here, but essentially what I'm saying is it wasn't really a surprise. I mean, we've been forecasting this for quite some time. Obviously, with the Federal Reserve's zero interest rate policy all throughout COVID, that sparked massive deal-making environment. Many companies choosing to go public. IPO market was going crazy. Really quick, so since this is 31st Street, these are my 2 favorite restaurants in New York. Take 31 as well as Her Name is Han. These are my 2 favorite Korean restaurants. They're absolutely fantastic. But now that interest rates are going up, it's sort of put a cap on the IPO market. So we've reviewed this many times, but IPO activity is down about 99%. And one of the biggest highlights, I think, as we were reviewing Wells Fargo's earnings report, since they are the largest, I would say they have the largest exposure to the mortgage market of the 6 major big banks in the United States. And we've seen loan originations down 70%. I think it's even going to go even lower. That 30-year fixed rate mortgage is at 7%. So on Monday, I think we're going to hear a lot of the same verbiage from Bank of America when they report, as well as Bank of New York Mellon or BNY Mellon. But the only thing I think these banks have going for them right now, I'll quickly give you guys a shot of the Empire State Building as we head towards Koreatown. I think one of the highlights from earnings season so far from these big banks is that the default to the delinquencies from a lot of their customers on the business side and the consumer side is you're not really seeing much of an uptick. And that's actually really good. And that means that businesses are well capitalized, consumers are well capitalized, at least for now. Now, even though we haven't really seen a big uptick in defaults or anything like that, 3 of the major banks that reported earnings last week decided to set aside a combined $1.56 billion for potential loan losses. Now, if you remember correctly, this is exactly the same thing that these big banks did during COVID. And thankfully, these banks never had to use those funds because you had massive amounts of economic and fiscal stimulus from governments, from the Federal Reserve. So if we think back about a year ago, another thing that really turbocharged those bank earnings was a lot of those loan loss provisions going back on the balance sheet because they didn't have to use those funds. So it's going to be interesting to see if these banks will down the road actually need to use them, or if this is going to be more of a softish landing and the economy really won't have that hard landing crash that everybody's so worried about. Hey, Water Blazing is here. Good to see you, my friend. I see Patrick, New York. Welcome, welcome. Paul Greenwell. Jason Francis, good to see you. So we're gonna walk to the west side of Manhattan tonight. Very, very busy day in New York. Tons of people. Huge uptick in tourists I've been seeing. I see Tin Man, Cindy Foley, good to see you. Melee. David. John says, hey Tom, hope you're doing well. Hope you're doing well. Two Wheel Freedom says thieves run off with over $500,000 worth of jewels in Manhattan at 430 Park Avenue. Yeah, so I saw that too. I couldn't believe it. Now, I think this was last night at about, what was it, like 3 a.m.? Something like that. Now, if you guys remember correctly, 430 Park is where I work out of quite often. So for those of you who don't know, 430 Park Avenue is a mixed-use building. So on the bottom couple floors, you have like retail space. I think there's a coffee shop, Joe and the Juice, if anybody's heard of that particular establishment. There's a Joe and the Juice, and then there's a very, very upscale and expensive jewelry store. And then you have all your corporate offices, a lot of hedge funds, financial firms in that building. And on the 18th floor is where the WeWork office is. So yeah, there was sort of like a smash and grab. We got a nice Tesla here. Tesla, we're gonna be talking about them tonight. They are reporting earnings on Wednesday. But yeah, it seems that there was a crazy smash and grab. And I think the New York City Police Department actually put out the video, and it was a crazy, crazy video. I mean, these people went in with like sledgehammers and stole a bunch of jewelry. So, John Sorley says, I'm moving to 432 Park Avenue. Yeah, I mean, that's a good point. It's very close to the very famous 432 Park building that we always talk about on the stream. Hey, Infinite Sky says, hey Tom, nice job on the new logo. Yeah, so what do you guys think about the new logo for the channel? Thumbs up, thumbs down? I'm glad you like it. I wanted to go for something very basic and more, I don't know, more bland, I guess? What do you guys think? John. Brian says, hey Tom, love the new channel logo. Appreciate it, my friend. Steve is here, says, hey Tom, greetings to everybody. A lot of thumbs up, appreciate it. Horatio Snipes is way too reserved. Yeah, I mean, I wanted something that sort of looked like the Wall Street Journal logo, which is just Wall Street Journal. Something just very black and white, doesn't really draw too much attention. Yeah, Ethan R says the text is a bit small. It probably doesn't show up well in the what is it called? Like the little icon on YouTube, but maybe it'll show up better on like different websites for publishing articles and things like that. Sunshine after rain, good to see you. Appreciate it. Hope you're having a good weekend so far. So this is West 31st Street and 6th Avenue. This is the M7 bus. This will take you all the way to Harlem. War Walker says, are we taking the ferry tonight? We can't take the ferry tonight, unfortunately, but maybe we'll do that tomorrow. I gotta make sure I take the earlier train. I have a very busy and early start tomorrow, Monday. This is a view looking uptown. And speaking of Bank of America earnings, you could see Bank of America Tower right behind the Salesforce Tower here. Bank of America will be reporting on Monday, October 17th, along with broker-dealer, which happens to be my broker-dealer, Charles Schwab, and Bank of New York Mellon. Now, if you look all the way down, you could see the very top of the One World Trade Center. Wow, Action Kid says the ferry might be closed now at this time. Really? AK, good to see you. How was your Canada trip? Hope you had a good time in Toronto. I see Roy S. So I want to read you guys a little bit of an excerpt out of Barron's that I think is going to be very useful for us, because if you remember back when we were talking about, I guess, sort of my thesis about the two phases of potential equity declines or stock market declines. And I think the first phase is sort of already baked into the cake. And the first phase, I believe, was interest rate hikes, right, from the Federal Reserve. And a lot of the declines that we've been seeing in the stock market so far is just repricing of those equities to better fit higher interest rates. So we all know, and we've explained this many times, that especially for those very rate sensitive stocks like the home builders and tech that have maybe earnings that are priced out into the future, as interest rates go up, the future value of those earnings, or the present value of the future earnings, are worth less. So I think phase two comes into earnings declines. And as of right now, I think a lot of the analysts at the major banks are being way too conservative, I would even say complacent, as it relates to their forward estimates for earnings. So here is a little bit of an excerpt out of Barron's this weekend. And it says, many analysts are expecting $55.56 in aggregate Q3 S&P 500 earnings per share, or EPS, 4% above the level a year earlier and compared with 8% in the previous quarter. So think about that. Analysts now are expecting an earnings bump year over year for Q3. Now, I'm not so sure that's going to play out. I mean, we already talked about how the major financials, major banks, their earnings were crushed. Now, it doesn't necessarily mean their businesses aren't profitable or they're good. It's just the comparables are so hard to beat, right? You're going up against, as it relates to the investment banks, 2021, where they made windfall profits as it relates to investment banking fee income. And now, since a lot of those deals have dried up and companies aren't going public, well, earnings are down about 50%. So many analysts say they see Q3 sales up 8% versus 13% in the second quarter. And analysts expect that the sector is expected, or the sector that they think is going to provide the vast majority of this earnings growth, is still the energy sector. And I think that I may agree with. I think I still agree with that. Because as we've been covering Q2 earnings for a lot of the oil companies, they raked in record profits off the back of higher oil prices. And even though we've seen energy prices come down a little bit, they're still historically elevated. And I think we're going to see another record quarter for energy companies, oil companies, and the like. Action Kid says, I'm not so sure that will happen. Analysts are too optimistic about earnings. Yeah, I think you're right. I think you're right, AK. Now, we've already seen the financials, the handful that have reported earnings pretty much cut in half, but that was expected. So I think I agree with you. I think that the second phase of this potential, and again, this is just very opinionated, right? This is my opinion. I think the second sort of waterfall declines in the stock market is just going to be from analysts repricing their earnings targets or cutting those earnings estimates. So right now we are behind Madison Square Garden. This is actually where the players come in. Hey, Rob is here. Says, hey, Tom, I just found your channel. Hello from Toronto. Good to see all of our Canadian friends. Thank you for joining the stream tonight. JR says oil is going to go back up. Yeah, I think as of doing video, the futures market is open. So I think if you look at crude oil futures, ticker symbol CL, I think we're trading at $86, right? 86 bucks. And JR says that $100 oil is coming again. You may be right. You may be right. Winter is coming, and I'm definitely a little bit worried about our friends in the UK. Guzman says, good night, Tom. Long time no see. Always a pleasure to have you here, Guzman. Thanks for being here. Christian Hansen. Charlie Richardson says, Tom, what software did you use to design your logo? So I didn't. I just used Microsoft Word. Honestly, I just put a little text box around Walks in Wall Street. And I'm like, yeah, I think that looks good. So yeah, I just used Microsoft Word. Wow. All right, team, we got to stop by Billy Joel and say what's up. It says Madison Square Garden is the center of the universe as far as I'm concerned. And I think I would agree. I think I would agree with our friend Billy Joel. Right outside of Madison Square Garden. You are now looking at the Hudson Yards development. And I think that's where we're going to walk to tonight. We haven't been to the Hudson Yards in a long, long time. Michael says, Tom, how early do you have to be at work? So tomorrow I got an early start. Now, my first roundabout of calls started about 9 o'clock, about 9 a.m. So, wow, look at the Moynihan train station. Does anybody know why it's lit up in purple and blue? This thing looks amazing. Charlie Richardson says, awesome, good to see you, Charlie. John B says, oil prices only went down because of the upcoming election. Oil goes back up after the election. So John B, are you sort of, I guess your thesis is that gas or oil prices, well, I would say oil prices, and then, you know, which in turns has heavily weighted on the price of gas, went down maybe because Biden released a lot of the strategic petroleum reserves. Is that sort of what your thesis is? Hey, Deep Value Alex says the logo looks very clean and professional. Thank you, Deep Value Alex. Appreciate it. Man, Moynihan train station looks fantastic tonight. Hey, photos from around New York. Good to see you. Welcome. So I'll give you guys one more shot of the front of Pennsylvania Station. So if you go right in here, this is where you get the Amtrak as well as the New Jersey Transit. So once again, this is coming directly out of Barron's. And the article says year-over-year earnings growth won't be much to write about. It says analysts expect $55.56 in aggregate Q3 EPS. That's 4% above the level a year earlier, compared with 8% in the previous quarter. Analysts on Wall Street see Q3 sales up about 8% versus 13% in the second quarter. And many analysts on Wall Street expect the sector to produce the majority of the earnings growth be energy. Now, they think a lot of downward revisions and earnings misses are going to come from the telecommunications sector, the consumer discretionary sector, and the tech sector in general. That is where many of the analysts think some potential earnings misses could be. And when some of these companies report earnings, they think that is where some of the forward guidance cuts are going to come from. And that I would actually have to agree. Hey, Michael, this is nice. Love the color. Good to see you, Michael. Sweet Country Living in Michigan is here. Welcome. Before I forget, I wanted to remind everybody of a topic we were talking about probably about 3 weeks ago now. So does anybody remember the night of the live stream where AMD actually came out and announced a profit warning and a sales warning? So AMD came out and said, look, earnings aren't going to be what we expect. We are slashing our sales targets. We are issuing a profitability warning. And they actually warned that their gross margins were going to compress from about 55% to 50%. Does anybody remember that? We were talking about that about 3 weeks ago when they first announced it. And one of the things I said is, I'm like, look, I think that there was a ton of pull forward in tech spend or IT spend during the pandemic. And I said, I was directly involved in a lot of these big sales towards state and local governments, as well as education, in relation to spending on laptops, Chromebooks, connected devices, so that these school districts could help those students sort of bridge that digital divide, right? Because what a lot of people don't realize is that once COVID hit, and all of these students were required to do work remotely from their homes, their houses. Well, the problem is a lot of students face the reality where they don't have internet at home. Okay, so they were disadvantaged to begin with, but now they were extremely, extremely disadvantaged. So what happened was state and local governments, as well as school districts, got massive amounts of COVID money, stimulus money. I was directly involved in the facilitating of purchasing, 20,000 plus. We were getting RFPs, or requests for proposals, for about 30,000 to 40,000 connected Chromebooks, Lenovo laptops, many of which pack AMD chipsets in them. So there was an interesting article this weekend in the Wall Street Journal where they were interviewing a superintendent of Little Ferry, New Jersey's school district. And one of the things the superintendent said is that this year, our spending on technology, on new Chromebooks and connected devices is literally going to be down 90%. Because he said we have all of the stuff that we need. And I just think it was so funny that this article came out, because we were talking about this about a month ago. I said, look, of course AMD is putting on a profit warning and a sales warning. They're cutting their targets. I'm like, because you had about 5 years of technology spend pull forward condensed into about 12 to 24 months. And so these school districts already have the infrastructure that they need. So my argument is that, look, it's not Armageddon. It doesn't mean that, these companies aren't doing well because there's no demand for their products. What it means is that a lot of these companies, municipalities, and school districts just already have the products. They already bought them. So if or maybe if anybody is in the chat, maybe you work at a school district, maybe you work at a local municipality in government, are you seeing the same thing? Because a lot of the school districts I worked with that had a lot of this COVID money, I'm not gonna say all of it was, maybe I would say about 25% of the money they were trying to look for things to spend it on. And if anybody knows about, government grants and things like that, it's either you use it or you lose it. So you saw at least 5 years of tech spending condensed into 12 to 24 months. I mean, it was just really, really ridiculous. So anybody else sort of, what are your thoughts on that? Rob says, I never thought about that. So true. Yeah, and I think the reason why I say that is because there's a lot of people that are very afraid, and they're saying, oh my gosh, the economy is going into a big downturn. Nobody has demand for these products anymore. And I would give a little bit of pushback. I would say, yeah, I think the market in general is going to go lower and the economy is not doing too hot. But I don't think you can point to that reason that AMD is cutting its revenue outlook and say, oh my gosh, there's no demand. There was actually too much demand that, I was working on requests for proposals in the tens of millions of dollars, right? For, a whole municipality to buy 30,000 Chromebooks. And they have them already. So it's going to take a couple cycles now for new orders. Maybe some students break them. Maybe remote workers start to break them, or these technology products go out of date. It's going to take 3 to 4 years for that to happen. So, there's definitely going to be a lull in that sort of spending, in my opinion. Big guy says full-blown recession. Yeah, well, I mean, we're in a recession right now, right? We got 2 consecutive quarters of GDP contraction, so we're already in a recession. But good to see a big guy. Welcome. Rob says they have to use these grants. If they don't, their grants are lowered for the following year. Yeah, Rob, you're 100% correct. So I was working with a lot of these nonprofit organizations, school districts, and I don't want the conversation to come off that I'm saying, a lot of this spending wasn't needed, because a lot of it was. And a lot of it, the reality is, there is a big portion of these students at these public school districts that don't have the luxury of having home internet. I mean, that's a reality. So I think a lot of this spending to bridge that digital divide was warranted. But to your point, Rob, about 25% of it, it's sort of like, look, if you don't spend the money, you're going to lose it, and they're going to lower your budgets for next year. So they were definitely looking for places to spend money. Rob says, I worked on grants for the feds in Canada. Thank you for sharing that. Wow, check this out. So you see a beautiful view of the Empire State Building as well as One Penn Plaza. That's One Penn Plaza all lit up here. DP is here. Good to see you, DP. Welcome. Austin City Limits is here. Yeah, so I think we should just keep that in mind. So there was an interesting Wall Street Journal article. I think you guys should go and read it. And it was essentially, the journalist was interviewing that superintendent of the school district, and he said, look, we don't need to spend money on technology because we already bought it. So just wanted to keep that in everybody's mind as we go into earnings season, because we're probably going to see big sales declines at the likes of AMD, Intel, NVIDIA. But I think in about 5 years' time, a lot of that demand is going to come back even stronger than now. Yeah, MN says that Moynihan in pink. It is. Now, I'm not sure why. Does anybody know why the color scheme on Moynihan is pink And excuse my voice, by the way, because I'm still a tad bit, I'm not really under the weather, but my voice is taxed from last week still, so I apologize. Yeah, so JR makes a good point. JR says the use it or lose it results in wasteful spending. They should change that, and I think it would be used more wisely. Yeah, I mean, I would say, like, again, in my personal experience, I would say about 25% of that grant spending was looking for ways to use it. About 70, and that's a pretty big margin, but 75% was actually used for appropriate purposes. Right, so I'll just give you an example of a deal. I won't give you, tell you the exact municipality, but with a lot of these connected, Lenovo laptops that have these, AMD chips in them, think about from a cybersecurity risk perspective. And we talk about this all the time as it relates to cyber threats and attacks. Look what happened with the Los Angeles Public School District. They are under an unbelievable cyber barrage, I would consider it. I think Suffolk County was hit with the big cybersecurity threat. So if you have literally 30,000 devices out in the field, now the industry terminology for that, if you work in cybersecurity, those are called endpoints. So the more endpoints you have out in the field, those are more entryways or pathways for malicious actors to compromise your corporate infrastructure. And, if you have kids, high school age and middle school age, those particular individuals are probably more prone to clicking on, malicious links that can download malware on your computer and compromise your infrastructure. So there was a huge spending in addition to the hardware on cybersecurity software. And a lot of that software I sold to these individuals, corporations during that time. To secure these endpoints, you could think about like an MDM or mobile device manager, like a Scale Fusion, a Code Proof, a VMware type of Jamf product if it's an Apple product or something like that. And that was the add-on spending that was needed, that was warranted, especially during these times. If you have all of your students working remotely with government provided devices and you're accessing internal tools from the school district, you need to, up your cybersecurity spend on that. So I think that spending was warranted. Where the spending wasn't potentially warranted was a lot of the add-on, maybe accessories, like a lot of headphones for these students. Like a lot of students were getting wireless headphones and earbuds. And now maybe that could have been a little bit dialed down or dialed back, but I think that was the 25% where many municipalities or school districts were sort of looking to spend the money. I guess that's just from my perspective. All right, team, we are here at the Hudson Yards, and it is looking beautiful tonight. This is the very famous vessel. Hey, I see EBITDA in the chat. Good to see you, EBITDA. Hope you're well. So EBITDA, speaking of you, my friend, Bank of America reports earnings tomorrow. I'd love to see your thoughts, what you guys think you're going to report. Hey, Dan Zhang says, Tom, it's important to pay attention to China this week because it's the 20th National Congress meeting. President Xi could possibly stay in power for the third term, potentially maybe permanently. Yeah, that's right. So Dan Zhang, you're correct. Now, Dan, maybe you could provide a little bit more insight on this, but I think over the past decade, the largest creditor, right, or issuer of debt to a lot of these smaller emerging markets has been China. And China has now taken over the United States for that place. So if we think about a national security threat or, Chinese influence to emerging market countries, that is a little bit worrisome to me. So I would love to know your thoughts, because you know a little bit more about this than I. Hey, Ann R is here. Says hello, Tom. Good to see you. Rodrigo Silva is joining us. We are now overlooking the beautiful vessel. But this building right here, everybody, is the Equinox Hotel. And I think some of the rooms at this particular hotel can run over $1,000 a night, if that's even possible. But they do it. EBITDA says earnings are always interesting, even though financials always drop, even when positive. I think IBD will be less given the slow deals and rates. Bank and wealth management are crushing it. Love that perspective. Yeah, and I think you're going to be right. I think you're spot on. I mean, we saw this with JP Morgan Chase last week. We saw this with Citi and Wells Fargo. Obviously, investment banking revenue fell off a cliff. As well as any big bank who has exposure to the mortgage market. Now, I think Bank of America maybe has the second most exposure to home lending, right behind Wells Fargo. So obviously nobody's doing any refinancing of their home loans because interest rates are 7%, and we are just emerging from a decade of ZIRP, which is zero interest rate policy. All right, let me give you guys one more shot of the vessel from this angle. We never come over here, so it's kind of nice. Jesse Ref says, yes, that is very possible. My boss there, wow. You spent $1,200 a night there, that's crazy. Well, how was the hotel, Jesse, if you could give us a little bit of an insight? Christian S says, we really enjoyed that area last spring. The Edge was an awesome observatory. Ah, that is right. So the Edge, I think, is right here. I think it's on the other side of this building. You are correct. Well, I'm glad you had a good time, and hopefully you can come back and visit New York very, very soon. Diana says, hey, Tom, hope you're feeling better. Yeah, I'm feeling about 95%. So I'm feeling better, but the problem is my voice is still taxed. I think that's a combination of multiple things. Obviously, just getting over a little cold, and then also it's been relentless presentations last week, back to back to back. So this is the shed, and the shed is actually on wheels. So if you see right here, this thing could actually move back and forth. Pretty interesting. BLN SMK says, is that building 100% a hotel or is it office space? I think it's luxury condominiums. I think half of it is luxury apartments, condos, whatever you want to call it. And then I think the other side is that Equinox Hotel and the Equinox Gym too. All right, so now we are at the High Line. When's the last time we've been on the High Line on the stream? I think maybe well over a month ago. They usually close it, so I think we're here early, which is good. EBITDA says, I think I'm going to go long on credit cards with more people unable to pay than ever before, and rates so many people north of 20%. I can't see how they won't do amazing over the next 2 years. Well, that's a good point, and that was the main takeaway. I think Jamie Dimon said that, and I think across the board at JP Morgan Chase as well as Wells Fargo, they said that credit card spending has been on the uptick. Obviously, as inflation is hammering many Americans, but the good news is we're not really seeing a lot of delinquencies and defaults yet. But there's I really forget how the terminology or the saying goes. I think it's called follow the money, if anybody's heard that term. And out of all the three major banks that reported last week, so JP Morgan Chase, Citi, and Wells Fargo, combined, they set aside about $1.56 billion for potential bad loans or loan losses. And they did something similar during the pandemic. Now, granted, with the coronavirus, they never had to use those, right? So that really turbocharged a lot of those bank earnings as they took a lot of that money back on the balance sheet. But I think banks see the writing on the wall, right? And we saw this with Jamie Dimon. He used the term a financial hurricane is coming. So if he thinks a financial hurricane is coming and he sees an uptick in credit card spending and credit card balances at his bank, well, there's no wonder why collectively those three banks have now reserved almost $2 billion for bad loans. Let's see if CEO of Bank of America, Moynihan, is going to do the same thing tomorrow. We'll see. I think they're closing this. So we're unfortunately going to have to go out here. Michael Dwyer says, Tom, zinc supplement is the best thing for your sore voice. That and double your vitamin C for a couple days. You know, I'm going to try zinc. I don't really use zinc supplements at all, but I may try that. So thank you for that, Michael. Thank you so much. The only sort of supplements I take is just like a multivitamin. I really don't know, maybe I should look into that a little bit more. The LT Prod says, which credit card company is the most profitable? So I have no idea, honestly, but speaking of the credit card companies, the LT Prod, did you see that it was the cover story of the Wall Street Journal this week? And the cover story was the top 50 companies in the United States for upward mobility of employees. Or essentially what it is, if you work at these particular companies, the odds of success later on in your career go up substantially. And it was a really, really interesting article. For anybody who hasn't read it, please read it, especially for all of our Walks on Wall Street viewers that are just graduating college. I think this is going to give you a pretty good insight of companies that you should be applying to. Now, could anybody guess the number one company, or that made the number one spot on the list for upward mobility and employee success? Not only upward mobility at the company, but once they move on from the company. Does anybody want to take a stab at it? MSK says, hey Tom, what is your reasoning about the Fed not selling mortgage-backed securities? Well, I don't think they need to right now. Right, I mean, could you imagine if the Fed was being aggressive with selling off mortgage-backed securities? I mean, rates are already 7%. I mean, the housing market is already cooked. Sales transactions have fallen off a cliff. So I don't think they really need to do anything else to kill off demand destruction. No, it was AT&T. It was AT&T. So number one was AT&T. Number two was American Express. And I think number three was ExxonMobil. And they rated this on a plethora of reasons, right? Number one, it was employee retention. Number two, it was how good the training programs were at these particular companies. Number three, it was pay and reputation. I think Goldman Sachs made the list right at number 50. But the reason why some of the big investment banks were further down on the list, it was because they are not as accepting to hiring individuals without college degrees. So a lot of other companies, like some of the software companies out there like Alphabet, big companies like Apple, a lot of the tech companies, they are more accepting and open to the idea of hiring somebody based upon a specific skill set and not necessarily the prestige of having some big fancy degree. And I'm not saying that, I'm saying those things are very good to have. You should go to college and get a degree. But what I'm saying is the metrics that they use to rate these specific companies of mobility, training, employee retention, that was a big factor in the rankings. And tech companies, aside from the financials, or when you compare them to financial companies, they're a little bit more open to hiring people that maybe have a certificate or an associate's degree as opposed to, a master's or an MBA. And as an AT&T alumni, I used to work for AT&T, I can say with certainty that their sales training program, or corporate sales, is just top-notch, best in class. Some of the trainers and sales professionals that I've worked under at AT&T, I still know to this day, and they are super, super sharp individuals. And I think the training program is really good. That's pretty much where I got my start in tech sales, telecom sales, is at AT&T. And they had good benefits. They had a big thing that I took advantage of there was their tuition reimbursement program. So let's say if I wanted to go back to college or go take a certificate program in like cybersecurity or something, the company would actually reimburse you for that. So I think AT&T was pretty good. That's just the company I could speak for, so. MK, good to see you, welcome. Tommy C is here. All right, team, let's head back into Midtown. Yeah, Rob says, it seems nowadays everybody in Canada has at least a master's. Yeah, it does seem that, it definitely seems like there's a ton of competition as it relates to academics, which I think is good for society, I think. I think the more educated the populace is, the better off society is. Hey, MK is here. What's up? BLNTSMK says, what advice do you have for somebody to be on the right path to build income and qualifying for more? I would say focus on building skills, right? I mean, if you want to earn more money, you know, if you just think back to just the basics of capitalism, you know, could you trade your skills for currency? So I don't know what those skills look like in your world, but, you know, maybe you are a software engineer, right? So I would focus all of my time and energy on becoming the best software engineer I could become. You know, maybe you're a nurse, so I would focus all my time and energy on becoming the best nurse I could become. Maybe you're in sales, right? I think there's a direct correlation between the skills that you have, you know, and how much money you make, right? So I would say focus on skills. Wow, look at this. I don't think we've ever seen this on the stream. This is cool. So this is right here at the Hudson Yards. Hey, Michelle K is here. Says hello, Tom and everybody. What's up, Michelle? Good to see you. I know Christian S's academic competition is insane. Yeah, Photos from around New York says, whoa, this is new. I think this may have just opened. This looks incredible here. Look at this massive spiral staircase. Oh, really? This looks fantastic. This looks absolutely beautiful.
We opened Wednesday night.
Oh, really? Oh, this is fantastic.
The first tenant moves in probably the 1st of December.
Oh, so
we're ready for tenants.
Oh yeah, that's awesome. Yeah. This looks absolutely beautiful. Fantastic. Oh, love it. Yeah.
Well, there's this
absolutely.
West lobby. There's an East lobby. There's like 8 lobbies in this building.
Do you know what tenants are going to be in the building? Eddie?
Facebook.
Oh, Meta's going to be here. Very nice.
Truist.
Oh, Truist. Okay, Truist Financial.
XTX, which is a Korean company.
Yep. Very nice.
2 other keys. There's 2 other firms that we've seen.
How does he get to see all the lobbies?
Not until it's open to the public.
Oh, okay, got it.
When I think they're not going to open it to the public until BlackRock moves in December. Other than that, it's just too much security.
Right.
You go down that corridor.
All the way down here, right?
There's another lobby like this on the east side.
There's 5 lobbies.
So you designed the entire thing, right?
No, I'm responsible. The architects designed it. I'm the guy who builds it.
Who built it? You did a fantastic job. This is beautiful. Absolutely beautiful.
So
I mocked up that stone 5 years ago.
Wow.
It's curved.
Scott's a little strong for the stone, but that's my pick.
That's a Frank Stella.
Well, it really your eye gets attracted right there. It's beautiful.
It does, and you kind of miss the stone, and that stone is cut so magnificently, it's so unusual.
Yeah, I think.
But
I mean,
it's
they
all
did a
good.
fantastic job with Hudson Yards. It's absolutely gorgeous.
This is the last of the first phase.
Wow.
But you'll want to see the other lobbies because
Okay.
they're so dramatic.
Yeah, it's open. The
Right.
sidewalk's
Oh
open.
my God, it's so gorgeous.
It's got a huge high ceiling area that they're going to. BlackRock's been commissioning a piece of artwork to go in there. I don't know. I haven't seen any renderings of it yet.
Okay. Yeah, I mean, this area has changed so much. I remember when it was a drive-through McDonald's. It was the only drive-through McDonald's in Manhattan.
Yeah.
It used to be right
Yeah,
here.
it's right on the corner.
Yeah. And so the whole area is just, it's
alleged
incredible
they
how
spent
it's,
$300 million for that property.
I can imagine, yeah. But,
Most
eh,
expensive McDonald's in the world.
I'll tell you a sweet piece of history that you may not get.
all right.
It was a 5-year. This was a 5-year project. My husband moved up here.
Okay.
So we only saw each other on weekends.
Oh my gosh.
And there were lots of babies born within those 5 years.
Okay.
And he and his admin lined up all the families on this staircase with all the babies.
Oh,
And
really?
had a photographer and took the
Wow.
picture. And they gave it to him as a going away gift, encased in glass. It's so beautiful.
That's beautiful.
Isn't that
That's awesome.
Yeah, no, all the lights are on. There's lights in all these reveals here that they have turned off.
Oh, so it'll be like it'll be backlit,
Yeah,
everything.
The lights under the steps. There's lights under the steps and lights in the reveals that aren't turned on right now.
Wow. Well, yeah, I mean, it looks beautiful. Yeah, I'm showing these guys. We run like a live show. It's called Walks in Wall Street. So we, like to show new architecture designs, talk about the financial markets. So they're loving it. They love it. Yeah. Yeah, everybody in the comments is saying it looks fantastic. So you guys did a wonderful job.
He did.
I can't give you enough praise. It's fantastic.
I know. It's gorgeous. It was a big job. And the one lobby is more beautiful than the other.
Right.
The desks vary, and they're crazy,
Three pieces of marble.
magnificent things that you're going to see in these lobbies.
That's awesome.
Yeah, they're all different.
Well, I'm looking forward to see it. Well, you guys have a fantastic night. Thank you for telling me about it. I appreciate it. Enjoy. All right, team. Yeah, that was the guy who built the Hudson Yards. Yeah, sorry about that. I didn't want to be rude. It looked fantastic. They were telling me about it. So this gentleman is responsible for building the entire suite of the lobbies here at Hudson Yards. So that's pretty crazy. We ran into them. That was awesome. Yeah, so he was telling me, I wouldn't want to be rude. I didn't want to cut the conversation off short. I apologize for that. But so BlackRock is going to be in here, Truist Financial, and I think a couple others. So this will be open to the public. So once it is open to the public, we will definitely be streaming through there. Yeah, Austin City Limits. This is Tom forgot about us. No, I just didn't want to be. I mean, it was awesome to meet, the person who built it. I didn't want to be rude and sort of cut him short. But that's awesome. All right, so team, we are now going to head back into the city. Well, into Midtown, I should say. This is 10th Avenue. Yeah, and I was telling the guy, I said, this area of Hudson Yards has changed so much. There literally used to be a drive-through McDonald's right here. So none of this stuff was here about 7 years ago. Now, we do these live streams all the time, so many of you see these big buildings and, always think, oh, these must have always been here. This area has completely changed over the years. Yeah, JP Auto Text, I love those kinds of impromptu conversations, especially with someone like that. Yeah, I mean, you never know who you're going to run into in New York. I mean, we ran into the gentleman who was responsible for building the Hudson Yards. I mean, that is pretty crazy. I mean, that definitely doesn't happen anywhere else but New York. And they were very nice people, very willing and open to telling me you know, some of the tenants that are going to be in the building. So it was awesome. Very cool. So I know the NHL, the National Hockey League, is in this building. And speaking of JP Morgan Chase, they are in this building along with Amazon. But according to the gentleman BlackRock, which is I think the biggest money manager by assets, or AUM, is going to be located right there. That's going to be awesome. Hey, I see Robert here. Good to see you. Welcome, Robert. All right, so quickly back on track here, everybody. So tomorrow we are also going to hear from the Federal Reserve Bank of New York as they release the Empire State Manufacturing Survey for October. So big pieces of manufacturing data, and I don't think it's going to be good. We'll cover it in a minute. Just let me cross the street here. Now, I think we already got a precursor to this. On October 2nd, I think that was the first business day of the month, we heard from the Institute for Supply Management, the purchasers or purchasing managers index decelerated once again. So manufacturing activity in the United States not looking healthy. So as we are going to hear from the Empire State Manufacturing Survey, many economists are expecting a minus 2.5 reading. That's compared with a minus 1.5 reading in September. Obviously, readings above zero represent economic expansion, and readings below zero represent contraction. So heads up for that tomorrow. Wow, this is a great view of the Empire State Building here, next to 1 Manhattan West. And I believe this is where the NHL headquarters is, as well as EY, major consulting company, and Accenture, right here in this building. The lobby is extremely unique. You have all of this wide open space here. It's almost like a mini atrium. And then you have all of the elevator shafts here. Very, very unique looking lobby. And this is another good shot of the Moynihan train station in the back. And you have a pretty unobstructed view of the Empire State Building. Now, Tuesday is an action-packed day on Wall Street. We're gonna hear from Netflix. And Netflix is one of those companies who used to be a surefire. Anytime Netflix reported earnings, it was going to be a big beat and raise. But ever since we've been pretty much oversaturated, and I think that's an appropriate term. Many of you would disagree. But I think a lot of the streaming services is just a very crowded market. And obviously the first mover advantage of Netflix is long gone. You have Disney Plus. How many other streaming services would you say there are out there, everybody? The ones I can name off the top of my head: Disney Plus, you have Peacock, Hulu, Netflix. So, I mean, I think just the industry is so saturated. Now, supposedly, Netflix has just announced that they are going to be launching a subscription tier of about $7. And it is going to include advertisements. So even though it's a little bit less expensive than I think the $12 a month, you could save a little bit of money, spend $7, get to watch all the content you want, but it has advertising. Now, I'm not sure how that's going to plan out, but I think we'll get an update on Tuesday as Netflix reports earnings. Okay, so China says no one's going to pay for Netflix when there's a lot of free ones out there now. Yeah, I mean, maybe everybody is going the freemium route, so give free content, but provide advertising. I mean, you're right, potentially. Yeah, Deep Value Alex says don't forget YouTube. So how much is YouTube Premium? Does anybody know the price of YouTube Premium? I mean, me of all people should know that, but I don't. I think it's like, what, $5? Yeah, so Sunshine After Rain says I have a lot of them since I cut my cable. Vinny says, Tom, if you're having ads, should be free. YouTube. Oh, it's $11. So Bernie Sanders 2020 says it's $11. Zach Drew says jailbroken Fire Sticks. That's another one, the Amazon Fire Sticks. I mean, it's a huge crowded market. Willie says, regardless, you still got to pay for internet. Steve from New Jersey says $12.95. Hey, Tom from Midtown says, I pay for whatever has the best content, like Showtime, having all of the A24 independent movies. So that's another one. So Showtime, you have HBO. Now, since it's Sunday, Tom from Midtown, I think I'm not a big Game of Thrones guy, but I think you have to be an HBO subscriber to get HBO. So that's another one. Now, the Wall Street Journal actually ran a study about this. Because I think the streaming market is totally oversaturated, and I think it shows up in Netflix stock price. I mean, the thing has been freaking pounded. Now, again, you could argue that it has more growth abroad. We'll talk about that later. But so here's what the study said. I'll cut right to the chase. It says now that a lot of people are cutting cable, the average family in America has 4 to 5 streaming providers. That can include, YouTube, that can include HBO, all the ones we talked about, Netflix, Hulu. Hey, Alex Jr., what's up? So NE says, Tom, I'm personally the type of person who would rather spend their money on subscription services rather than going out to, say, a restaurant or a club or spending something like that. Okay, that's good insight there. Jesse says, what is Peacock? I've never heard of it. I couldn't name one show on Peacock. I just know that it's one of those services. I think it may be an NBC product, I think. So this is 34th Street. Oh, that's a guy. So this is 34th Street. You can get the ACE train here. We are standing right outside of 8th Avenue, 33rd Street, subway entrance, also the Long Island Railroad entrance. So I do have a question for everybody in the chat. So based upon that statistic, and obviously in light of Netflix earnings that's coming out on Tuesday, for those of you in the chat, how many subscription services do you particularly subscribe to? Is it 1? Is it 2? I would be interested to see if the data that Wall Street Journal is putting out matches up with the results in the poll. Liquid Nate says WWE is on Peacock too. Not for nothing, everybody. WWE is a stock I'm watching. WWE is a stock I'm watching right now. Deuce is 5, Julia M says 0. Photos from around New York says 2, Lonnie says 6. Okay. Luciano says 3, Dr. Longus is 1. Liquid Nate says 1. Warwalker 2, James Dixon says 4 services. NE says 5, but I split them. Okay, so maybe you split them between like friends and family, things like that. Dan Zhang says, Tom, I have 3 Peacock, Netflix, and Prime. That's right, Amazon Prime Video. I think Amazon Prime recently just got a contract with the NFL, National Football League. Laney James says 2 HBO and the NFL Network. Herbert says I have 2 Amazon Prime and YouTube Premium. So it seems like the Wall Street Journal's data was pretty correct. Michelle McGraw says I have 5. Andre Almar, hey, what's up, Andre? Says 4. So Marcelo Rodriguez says, Tom, Amazon Prime is becoming huge as well. Well, I think Prime signed a deal with the NHL. So I think there's football games, maybe Thursday night football games on Prime. Ah, Lonnie, that's right. So Prime is Thursday night football. So I guess as it relates, let's not walk up 8th Avenue. There's two rules that I live by. And nothing good ever happens under the 50-day moving average, and nothing good ever happens on 8th Avenue. Michael says, what is the Hulu stock? So Hulu is a publicly traded company. MSK says Disney acquired Hulu? Really? Wow, I didn't know that. Huh. I didn't know that. That's interesting. So I guess for me, look, a big hedge fund manager that we talk about all the time, Bill Ackman, made a big bet on Netflix. He held on to it through one earnings cycle. The company missed earnings big, and the stock got clocked, and Bill Ackman sold out of his position. And I think Bill Ackman, rightfully so, I think he made the right choice. Because there comes a point in time where I believe your first mover advantage subsides. And I think Netflix first mover advantage as it relates to streaming services, I think it's subsided. I think that trade is over. There's, just think about what we were just talking about a couple minutes ago on the stream. Everybody's like, I have 5 streaming services, 3, 4, 5 streaming services. I think it's a pretty crowded market. I don't know. I don't think I would want to have single stock exposure to Netflix. Just my opinion. Yeah, Dan Zhang says Ackman took a huge loss on Netflix. But at the end of the day, I think Bill Ackman did the right thing. Hey, David Carter, thank you so much for your support. I appreciate it very much. Ed Dunkel says, Tom, the Hulu streaming service is currently owned by Disney and Comcast, having stakes of 67% and 33% respectively. Thank you, Ed. Appreciate that. Yeah, I mean, Ed, I don't personally, even for me, I don't even have a TV. Well, that's actually not true. I had to get a TV for the Airbnb guests. But for me as a 20-year-old, I guess you can categorize me as an early millennial or late millennial, whatever. Maybe Gen Z. Now, Mark Cuban came out with a statement and said that Generation Z starts at 1995.
I need a lighter.
Oh my God. I'm not so sure about that, but whatever. I guess you can just consider myself a millennial. I don't watch cable news. I get the vast majority of my news from Twitter and YouTube via clips. So it's not like I sit down and I watch, Tucker Carlson, or who's the other one on CNN? I think he may have gotten fired. And I don't think many millennials or Generation Z do that. I don't think anybody pays for cable. I think that industry is going to get completely disrupted, and everybody just mainly gets their news from YouTube or clips on Twitter or even Facebook sometimes. Is this a fire alarm? Hope everything's all right. Well, hopefully there's not any real fire. Zach Drew says, in Disney park profits include products such as the licensed toys and collectibles. Well, I think in Disney's Q2 earnings, they had record profitability at their parks. And the interesting thing is, they had record demand and profitability at their theme parks, and they're still running below COVID capacity. So in theory, if they really went to 100% capacity, could you imagine how much more profits they could rake in? Now, granted, maybe they're doing that for a reason, right? Because maybe user experience or customer experience would go down if they flooded, 100% of the capacity into the theme parks. Maybe people wouldn't return as often because it's too crowded. I think that's also a good point. Hey, Matthew P is here. What's up, Matthew P, good to see you. Gonzalo says that's weird. Yeah, one of the interesting things about living in New York is that you get desensitized to fire alarms. You get desensitized to, sirens. Has anybody, maybe who's a New Yorker in the chat, have you guys noticed that? I think when you're out in the suburbs and you hear, the fire department or the police sirens going off, it has an impact. But in New York City, it has no impact. Like, it could be total chaos and everybody's just like business as usual. Excuse me. Hey, Sunshine New York City says yes. Yeah, Rita says yes, very true. Yeah, it just doesn't have the same effect. But if I'm driving out on Long Island or something and I hear like a fire truck or an ambulance, I'm like, oh my gosh, what's going on? But here, it's like, meh, business as usual. Okay, so team, we have a couple other things to run through here. So Tuesday, October 18th, Netflix will report earnings. Look at all these pigeons. Fueling up for earnings season here. We have Lockheed Martin, Johnson & Johnson, Hasbro, Goldman Sachs will also report on Tuesday. Now, I think Goldman Sachs earnings are probably going to get cut in half because here's the thing. Goldman Sachs is a traditional investment bank. It is not like Bank of America or Wells Fargo or JP Morgan Chase, where they have broad-based exposure to the consumers or retail like me and you. There's no Goldman Sachs that you could walk into and do retail banking. So they have the full brunt exposure of the investment bank. And as we talked about, IPO activity is down about 99%. I think investment banking activity is going to fall off a cliff, which is to be expected. But on the brighter side of things, when market volatility increases, usually proprietary trading activities are very lucrative. So I think a bright spot out of Goldman Sachs earnings on Tuesday is going to be in their trading department. Usually, well, what is the one thing that traders need to make money? It's volatility. We've definitely had our fair share of volatility thus far. Hey, Laura M says, I read the book Bully Market on Goldman Sachs. Now, I haven't read that. So, Laura, what was the book about? Just about the beginnings of the story of Goldman Sachs, something like that? Now, a good book. So I'll tell you, you want to know a book I'm reading right now? I'll tell you guys a book I'm reading right now. After I give you another beautiful shot of the Empire State Building. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you are new. We'd love to have you on these live streams. We do them about 5 days a week. Okay, so Laura Ams is a former employee, a female, wrote her book on her experiences of 18 years of working at Goldman Sachs. Wow, that should be an interesting book. I'm gonna have to check that out. Thank you for that recommendation. So I was meeting with a client last week, and it wasn't for like any new deal or anything like that, but I always like to keep in touch with my best clients who've either spent the spent a lot of money and time with me, and I've sort of helped them grow their businesses. So I always like to keep in touch. Once a month I'll pop in the office, bring something, take them out for coffee or dinner, something like that, just to maintain the relationship. And many of my long-term clients are like my friends, personal friends. Anyway, you guys don't want to hear all that nonsense. So he gave me a book. He's like, hey, Tom, I want you to read this. He's like, this is a good book. I want you to read it. I'm about halfway through, and the book is interesting. I'm going to say it's interesting. It's good so far, but it's interesting. And the book is called How to Fail at Almost Everything and Still Win Big. So again, for those of you who maybe want to check it out, it's called How to Fail at Everything and Still Win Big. And it's interesting, I never heard of this book before, but the author is actually the creator of that business comic strip, Dilbert. Now, I think I'm a little bit too young for Dilbert. I never was one to get into the comics, but supposedly Dilbert is one of the most successful, I guess, comics of all time in the business world. Anyway, the book is really thought-provoking. So, just wondering if anybody's ever read that book. When I'm finished, I'll give you guys the update. But so far, it is very, very interesting. And I think I agree with a lot of it. Now, I'll give you guys one of the most interesting things that I thought about the book so far. I don't want to ruin it for people, and I agree with this. And it was, at first in life, if you want to be really successful, don't necessarily focus on your passions. You got to find something that you're good at and expand on that. And I think that is so spot on, because oftentimes people will say, how did you get so successful? They'll ask some billionaire or something, and they'll say, oh, you got to follow your passion, just do what you love. Well, I love playing soccer. I mean, if I could, if money was not an issue for me, I would play soccer all day, every day. But the reality is, if I did that, I would starve, right?
She'd be like, oh yeah, I got this.
So I'm super passionate about soccer, but I'm not Cristiano Ronaldo. Now, you got to focus on the things that you're good at. And it just so happens I'm very good at corporate tech sales. Now, am I super passionate about it? I mean, I guess. But it's not like I'm obsessed with it. Like, I would enjoy it as much as playing soccer every day. And another sort of things about the book is that you tend to find that you're passionate about things that you're good at. So I think this may be obvious, but the way the book explains it is very, I guess, sort of eye-opening and thought-provoking. To say, look, at the end of the day, maybe early on in your career, focus on going after the most lucrative opportunities, even if you don't like it the most. And then once you're older and you have a big cash cushion, then you could focus on the things that you're passionate about. And I think I would agree. I think I'd have to agree.
It was a cool sentiment.
Hey, Juju Lara is here. Good to see you. Andre Almar, which soccer team do you support? So internationally, I would say Arsenal. Say Arsenal. Oh, James Dixon says Scott Adams has a few books. Yeah, I just ran into the book, and look, it's I'll give you guys a full review once I'm finished reading it, but it's interesting. I never really read from an author that was so direct and almost at times comes off as very brash. So it's good. It's good. It's interesting. Hey, Ken Glass, good to see you. Welcome. All right, team, moving right along here. So on Wednesday is also a big day for corporate earnings. So on Wednesday, October 19th, we hear from IBM. We hear from Procter & Gamble, Citizens Financial, ASML Holdings, Lam Research. So obviously in the semiconductor space. And earlier on in the stream, we sort of talked about, semiconductor demand falling off here. And we mostly signaled and talked about AMD coming out with their profitability warning and their revenue warning. And I said that this is to be expected because you had so much pull forward in tech spending due to the pandemic. So I think we're going to see the same thing with ASML and Lam Research. But do you guys want to take a guess at probably the most important earnings report that's going to happen on Wednesday? Anybody want to take a guess at who's reporting Wednesday that is going to be the most critical for the market? Anybody want to take a guess? Now, while you guys are guessing, hey, Sandra Nunez, good to see you. I'll show you guys the Salesforce Tower. So Salesforce, ticker symbol CRM. Salesforce Tower is right across the street from the beautiful Bryant Park here in New York City. Yeah, Ken Glass, you got it. Tesla, Zach Drew, you're correct. So Elon Musk's Tesla will be reporting earnings on Wednesday, October 19th, 2022. Now, if you got, so Andre Almar, the Beige Book, is also going to come out next week. The Federal Reserve's Beige Book that is published. Oh, let me just cross the street here. Bank of America Tower, they're reporting earnings on Monday. But if you guys are following me on Twitter, so if you go to Twitter and you follow @WalksWallStreet, I posted a series of charts, and the monthly chart on Tesla looks so egregiously bearish that if this earnings report on Wednesday comes in below analysts' expectations, I think that Tesla stock is going to blow right open, and this thing could be down 15-20% if they miss earnings. It looks to be that Tesla is carving out this disgusting head and shoulders topping pattern, and we do not have the Federal Reserve at our back. We are in a quantitative tightening cycle. And next week, the Federal Reserve may even announce an increase in the runoff in their balance sheet that is made up of mortgage-backed securities and U.S. Treasuries. Ken Glass is 100% so true. Now, again, I love Tesla. You guys know that. When we do these live streams, I always point out the specific cars on the street, but Tesla is one of those mega cap stocks that has yet to crack. You know, you look at a chart of Alphabet or Google, ticker symbol GOOGL. That is blown wide open and cracked below its 200-week moving average, or a 200-day moving average. Apple is starting to roll over. Meta has gotten crushed. Meta is down like 78%. And I think the Mr. Market is going to come for Tesla relatively soon. Hey, Rob says all of our city's buses are now electric. So I'll give you guys a quick glimpse here. They are setting up the Winter Village here at Bryant Park. So if anybody is not familiar, here at Bryant Park at 42nd Street, in between 5th and 6th Avenues, during the holiday season, they make the winter village that looks things that is so abundant yet so scarce at the same time. Wow, look at this. This is a beautiful view of the Chrysler building as well as the One Vanderbilt. So speaking of Wall Street, this is the Stephen Schwarzman building right here, the New York Public Library. Now, Stephen Schwarzman made the vast majority of his money in LBOs, or leveraged buyout deals. Hey, Gott says, what is your guess of Bank of America earnings and Charles Schwab earnings for tomorrow? You know, I think Bank of America earnings is going to follow exactly the path of JP Morgan Chase, Citigroup, and Wells Fargo that we heard from last week. I think investment banking revenue is going to be down severely. I think they're probably going to make a little bit more money on their deposits now that interest rates are higher. And I think we're going to see that credit card spending has gone up substantially at the bank. So that is sort of my prediction for Bank of America. Nothing out of the ordinary. But what are your thoughts? What do you think? All right, everybody, this is the New York Public Library. Look at how amazing the architecture looks on this building. Fantastic. So this is West 41st Street, but it's also called Library Way. You could see on the street sign right here, 5th Avenue, 41st Street. Now, I think I've said this many times, but since we have a lot of new viewers here, if you are ever coming to New York City, this is actually another brand new New York Public Library right across the street. And if you go to the 5th floor, this is the International Business Center, where you could actually use a lot of the Bloomberg terminals for free, which is very good for anybody who's in or interested in finance. Because if you don't work at a bank, if you don't work at a hedge fund or something like that, a Bloomberg terminal is going to cost you about $2,500 a month. So to be able to use it for free is fantastic. Hey, Rob says, what a fantastic channel you have. Truly enjoying this. Hey, well, thank you for being here. I appreciate it. Rob is a new viewer from Canada. Good to see all of our neighbors to the north. MN says, why did they barricade the library? Yeah, so it's a little bit of a bummer because this is such a beautiful area, and I want to show you guys on the stream, but since we've been having a little bit of a homeless issue in the city, This has turned into like almost like an impromptu shelter. So they've been putting the barricades up and closing it, I think at 9:30 at night. All right, so let's cross the street. I want to show you guys an amazing shot of the library, standing right on Library Way. I'll also show you the EY building, so the Ernest & Young building as well. Hey, Margot is here, says, wow, this is very nice. Seeing my city peaceful like this is helping. You feel maybe not all is lost. Thank you so much. Hey, NMB 045 says, Tom, I visited the Bloomberg terminals back in June upon your advice. So what did you think? What did you think, NMB 045? I spend a lot of my time there, so. I always say, if I was a college student again, I would be living in that library on those terminals. All right, check this out. Beautiful shot of Salesforce Tower. Well, we got to get out of the way because the garbage guy is going to come collect the trash. But we'll walk down a little bit more and I'll show you. But if you guys enjoy sort of the topics that we talk about as it relates to the financial markets, if you scan the QR code on your screen, I write a free investing newsletter where I cover not only the US equity markets, but I cover emerging markets, fixed income as well. And we usually send it out every other Tuesday after the market closes. So here's another shot of the Stephen Schwarzman building. I will just quickly repeat one of my favorite things about the New York Public Library here, if you're visiting. In the NYPL Research Library, they have an investment classic, which is one of the most rare finance books ever. It is called Margin of Safety by Seth Klarman. So there was only about 5,000 copies of Margin of Safety ever printed by Seth Klarman. And one of the original copies sits right here in the Stephen Schwarzman building. Now, you can make an appointment to read the book, but you cannot take it out. It sits in the research library, and it is a beautiful, beautiful section of the library, and I would recommend anybody to go check it out. So you can make an appointment on the New York Public Library's website, select Margin of Safety, and you could reserve up to 2 hours with the book. I think it is widely regarded as one of the best value investing books of all time. Hey, Out and About is here. Speaking of Toronto, Canada, good to see you. Out and About, thank you for joining. Our good moderator. Mike sees, do they watch you while the book is checked out? Yeah, so it's the research library, so you can't physically take it out, right? You can't leave the premise of the library, but I think there's like maybe 3 or 4 chaperones in the room with you. So this is the EY building. I also think BMO Capital Markets are here as well. But since we're so close to Pershing Square as well as Grand Central Station, I think I might as well take you guys along for a quick walk around Grand Central if you wouldn't be so opposed. Mike MTL says, why is there so few bikes available? Yeah, so I'll tell you a speculation. So here's one of my speculations about why there's too few bikes available. And this speculation comes from a Python course I took at Columbia Business School. It was like one of those certificate courses. And we actually had to do some data analytics on the city bikes and another company called Dig. So this area of Manhattan is a lot of office buildings. Very seldom do people live here. So a lot of the tourists get the bikes in Midtown, and then bike maybe to the Upper West Side, the Upper East Side to where they live. But then I can guarantee you, if you come here at 8:30 or 9 o'clock tomorrow morning, every single bike or every single slot is going to be filled from people commuting to work on the city bikes. So that is my best guess at it. Because I mean, if you think about it, a lot of tourists, a lot of people want to come to Midtown, Bryant Park during the weekends, and then they take a city bike home to the Upper West Side, maybe the Lower East Side, Greenwich Village. And then when they have to come to work, they get back on the city bike and they flood Midtown Manhattan again. Hey, we got Dusty Cole in here. What's up? Good to see you. Bit of Wander is here. What's up, Bit of Wander? Always a pleasure to see you. So speaking of the crazy, crazy housing market, I think we'll finish off the last day of the week. Well, actually, let's start with Thursday. So Thursday, we are going to be hearing from the National Association of Realtors as they report existing home sales for September. This is Pershing Square, by the way. So once we point the camera all the way over here, you'll see the beautiful Grand Central Terminal. So expectations are for a seasonally adjusted annual rate of 4.70 million homes sold, compared with 4.80 million in August. And I think the number's actually going to come in a lot worse than that. And here's sort of why I think that. And we've been reviewing this for quite some time on the stream. But the average 30-year fixed rate mortgage right now is about 7%. So that is going to dry up a lot of the buying activity in the housing market. And I think in Q1 and Q2 of 2023, it's going to lead to price declines. So before we have the price declines, we have the existing home sales declines. And I think that this is going to be the first month where a lot of buyers actually saw those higher rates. So I actually think the economists are going to get it wrong here, and there's going to be an even worse number as it relates to existing home sales. Now, what do you guys think? What are your thoughts or predictions for the realtors' existing home sales? Do you guys think it's going to come in above expectations, below expectations, or is it going to meet expectations? And once again, this is the Chrysler Building as we are standing right at Pershing Square with all of our pigeon friends. Hey, Ryan Beck says big companies still buying up real estate in prime markets. So I think you have a good point. Now, one of the things that we did cover. Hey, Teresa Diaz, thank you so much for the $2 donation. Wow, that's crazy. 24,400 subscribers. That's insane. Holy crap. Well, thank you guys for that. I really, really appreciate it. Wow. Jeez. It's wild. One of the things that we did see, I forget who made that comment. Maybe it was Ryan, let me see. It was Ryan Beck. So Ryan Beck, to your point, a lot of the single family home builders, they're in a little bit of panic mode right now. And the reason why they're in panic mode is because a lot of the homes that they have that they couldn't sell, they're actually reaching out to institutional investors to potentially solidify deals where they sell off these single family homes in big block transactions to either real estate investment trusts or private equity firms that will then rent them out as single family rentals. Now, the interesting thing about that is once these big block transactions, or once they start to occur, they're probably going to be sold at severe discounts, probably about 25%. So the single family home builders probably won't lose too much money on it. They'll probably break even on a lot of these deals. But to your point, you know, many first-time home buyers are like, finally, rates are going up. That means housing prices are finally going to come down, and maybe after all of these years, I could finally afford to buy something. Well, hopefully that's true. But in order for prices to decline, the number one thing that we need is for a lot of inventory to come onto the market. And if a lot of these single family home builders are saying, look, I don't want to take a bath on all of these homes that I can't sell, I'm just going to block sell them to Wall Street at maybe a 20% discount. Well, do you think Wall Street is just going to sell them back to retail? Well, probably not. They're probably just going to use them as cash flowing real estate, cash flowing rental properties, and rent them back out. Now, I do think that we could see a situation where we have a little bit of uptick in inventory. Well, let's just say I hope for all of our friends who are looking to purchase a property. But the only reason why I'm a little bit reluctant to say that we're going to see a huge, massive wave of inventory starting to hit the market is because the underwriting standards or requirements were very, very good this time around. Now, when I'm talking about this time around, I mean leading up to the 2008 financial crisis, the lending standards or the underwriting standards were egregious. They were horrible. You know, no income verification, no credit check. Now, if you want to get to qualify for a loan, you have to have a solid credit score, good job, lots of cash savings. So a lot of the deals that were done, I'll take you guys into Grand Central Station. I haven't been in here in a while. So a lot of the deals that were done, they were properly underwritten. So I think the default risk is substantially less than it was leading up to the financial crisis. But here we are. We are now in Grand Central Station. We'll have to use our inside voice. Hey, Marcelo Gillis here. Says, hey, Tom. Have a nice beginning of the week. Thank you, Marcelo. Marcelo is joining us from Brazil. Good to see all of our viewers from Brazil. Ryan Beck says, but the issue now is that all of a sudden equity that people built up in real estate is declining. Now they're underwater on freshly leveraged homes. Yeah, that's definitely a good point. But the thing, so I would say that's probably going to be right for a lot of individuals who bought during the pandemic. Because to Ryan's point, I think he makes a really good point. So to sort of piggyback off of what you're saying, I think a lot of people who are going to be in trouble or quote unquote underwater are the people who are, offering $100,000 over asking price, who are waiving necessary inspections. I remember about a year ago when we were doing these live streams, I'm like, those people are going to regret this. You know, that is rookie mistake number one. You never overpay for real estate. You never get into bidding wars, and you never, ever, ever, under any circumstance, waive necessary inspections. That is rookie mistake number one. And I think, unfortunately, a lot of people made that mistake. So I think there's going to be maybe a sub-segment of the market that are either forced to sell, something like that. But I don't think it's as broad-based. That's a good point. That's a very good point. Gott says most people are just going to sit on their homes. They have great interest rates at 2.5%. Why sell? So that's another good point. So my rate, and I think we actually took this poll before. So I'll tell you guys what I have. I have a 3% interest rate. Now, granted, I had to put 25% down on my property, mainly because, so I think this is actually a very good thing to talk about here. But before we do that, I'm losing my voice, so I may end the stream a little bit early. But check this out. So if you look all the way, here's a piece of New York history for everybody watching. If you look all the way over here, you see this little black dot? right there. So that's actually how the entire ceiling used to look here at Grand Central Station, because back in the day, you could smoke cigarettes here, you could smoke cigars, and all of that tar and nastiness would stick to the top of the roof. In order for everybody to remember that, when they did the restoration, they made sure they kept that little, I would say, rectangle uncleaned, so everybody would remember how it was when everybody used to be able to smoke in the building. So I see the Mighty Bull. Good to see a Mighty Bull. I mean, if the Mighty Bull's in the house, we got to show the Mighty Bull on the ceiling. S-Piece is also, you have people who got super low interest rates last year and won't want to sell. So that is true. That is true. Charlie Richardson says, take a hydration break. Yeah, I think I should have brought some water. So anyway, I'll tell you guys sort of my situation, because now that we were talking about underwriting standards. So when I bought my first investment property, the bank required me to put 25% down. And I have a very good credit score. And the only reason why they required me to do that is because technically at the time I was self-employed, because I had left my tech sales job to sort of do my own thing and sell software / hardware somewhere else. So even though I had essentially enough cash to pretty much buy the thing outright, they still are like, we are not going to write this deal unless you put 25% down. So that just gives you an idea of how strict the lending standards are. So as it relates to default risk, that's why I don't think you're going to see massive foreclosures, right? Also, and I think another thing that's important to keep in mind is that leading up to the 2008 financial crisis, there was a lot of ARMs, or adjustable rate mortgages. And even though there are still adjustable rate mortgages now, the adjustable rate mortgages of the 2020s are a lot different than what they were leading up to the great financial crisis. Now, many of them have an interest rate cap of how much the rate can change on you. So you're not going to get those big balloon payments, but the vast majority of people have fixed rates. So I think another thing that's tying up inventory here is, why would somebody sell their home now, even if they were going to move somewhere else, to just enter right back into the market and pay 100% more as it relates to the cost of debt acquisition? Why wouldn't they just maybe rent out their existing home, or maybe they have a duplex or triplex? Why wouldn't they just fill that vacancy and then go rent somewhere else? I think that's an interesting question. Maybe it's a far stretch. We'll see. Explode V2 says, hey Tom, what college did you go to? I went to a very local and small city college here called John Jay College of Criminal Justice. Oh, I wanted to show you guys this. Hold on. I'll walk over this side. You have a better view. 3 streams ago, I actually took you guys on a tour of where I went to school. But this is one of my favorite locations, one of my favorite spots in Grand Central. Take a look at the artwork on the ceiling here. It's fantastic. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. We'd love to have you guys along. So Connor says appraisal gap coverage was regular and high competition submarkets. Found multiple situations when people were underwater as soon as they closed. Not ideal. Yeah, that is not ideal at all. GOTS default risk is at an all-time low. Plus so much home equity is built up right now. Yeah, so that's true, but I think there was a couple other viewers in the chat that we're saying, yeah, so even though there's a lot of home equity built right now, that equity is slowly eroding because obviously interest rates are going up. We haven't really been seeing that, I would say, heavy price declines, but you guys know my take on that. I think we're going to see those price declines in Q2 of next year, because obviously the housing market is less liquid than, let's say, the equity market or the stock market, right? So traders on Wall Street can easily discount stocks to account for higher interest rates, because as interest rates go up, let's just take into consideration like those very high beta, high frothy tech stocks. As interest rates go up, a lot of these stocks had earnings priced in the future, or most of their earnings were in the future, not present value earnings. So those earnings are now worth less. Those future earnings are now worth less today because interest rates are higher, right? And it's very easy to reprice that. But in the real estate market, you have to list the house for sale, people have to walk the property, and the transaction to sell a piece of real estate is very, very long as it compares to stocks. So what you're gonna see, and I think we're seeing right now, is existing home sales, the transaction volume is gonna dry up. It's gonna become non-existent. People are gonna realize, wow, my home isn't selling, this sucks. So then that is when the price declines come. So the price can match the buyers what they could afford. Take a look at these chandeliers here. These are absolutely beautiful. What do you guys think of the chandeliers here at Grand Central Station? Fantastic. Now, I think that Grand Central Station is an architectural marvel of New York. It is an absolutely beautiful building. Man, this is gorgeous. Hey, the rally car is here. So this is the whisper wall. You see this guy talking into the side of the wall? So if you talk into that side of the wall, your voice will go all the way up and around, and you could hear from this side. So it's called the whisper wall. Isn't that cool?
Yeah, it travels all the way across.
Hey, Stephen Byte. Good to see you, my friend. Jane Lee James, this looks like a treasure. Good to see you. Yeah, the LT Prod, that's so true. That's so funny. Deep Value Alex says, as I understand, banks were also not foreclosing during the pandemic. That's also true. There was a lot of the forbearance. Remember that craziness? That's also a very good point, Deep Value Alex. Dan Zhang says, Tom, do you think Kathy Wood could be in big trouble? Yes. I think she's already in very big trouble. Now, what'll probably happen with that is she may just have to close down a lot of those ETFs. All right, let's cross the street and head back to the Moynihan train station. Hey, somebody says watching from Ghana. Very cool. Thank you so much for watching. All the way from Ghana. That's fantastic. That's amazing. Thank you for watching. You know, speaking of Ghana, I was actually watching today some old soccer highlights from back in the day. One of my favorite games ever was the United States versus Ghana in the 2010 World Cup. It's a fantastic game. I'm not sure if there's any soccer fans in here. Now, does anybody remember the 2002 United States national team? All of those greats, like Claudia Reyna. Anybody remember him? Kobe Jones, Brian McBride. Oh man, those were fantastic. Man, those guys were really, really fun to watch. Eddie Pope, DeMarcus Beasley, all the original U.S. national team players. Fantastic. Yeah, Sonia C says, Tom, did you celebrate when Italy won the World Cup? Yeah, I did. I actually went into the city that year with my family and bought a bunch of stuff in Little Italy. That was in 2006. Yeah, they won on penalty kicks. Fantastic. I remember that very well. Yeah, that's right. Yeah, a lot of you guys probably call it football. Yeah, so Plains and Palm Trees says, Tom, are you going to watch any of the World Cup games? 100%. Of course. Absolutely. A lot of Argentina fans. So Leo Messi. Yeah, Darks is Landon Donovan. Absolutely. So I think my favorite U.S. men's national team player of all time. I got to think about this for a minute. Sorry if I'm boring all the non-soccer fans. But we're coming up on 2 hours on the live stream anyway. I think I'm going to have to throw you guys a curveball. I think I'm going to have to say Kobe Jones. Yeah, I think I'm going to have to say Kobe Jones. But I mean, so many just amazing players. Claudia Reyna is another one. Very good. Wow, Mike C says you saw Pele play in the 70s? That's amazing, man. That's a piece of history. That's awesome. Photos from around New York says, Tom, do you follow NYCFC? Very lightly. Well, they won the MLS Cup, I think, in 2021 maybe, right? 2020? Yeah, Alexi Lalas. So I think Alexi Lalas may be a commentator now, right? Yeah, so Alexi Lalas, Brian McBride. There was another guy his name is on the tip of my tongue, but I just can't remember it. I'll think of it in a second. Yeah, Walking Minnesota says I enjoyed Landon Donovan a lot. So I really enjoyed Landon Donovan. He actually had a short stint at Everton, I think. He was on loan to Everton for a little bit. He played pretty well. That's it, Troy. You guessed it. Taylor Twellman. Yep. Man, you know what that means. Once I get on the Long Island Railroad, I'm going to be watching soccer highlights from 2010, 2002. Dr. Longus says, Tom, did you ever see the old movie called Victory about soccer and Pele was in it? No, I haven't seen it. Oh, Robert Lewandowski, yeah. So newer players like Kyle Beckerman, he's good. I think he just retired, Kyle Beckerman. He was a midfielder. All right, so on Friday, to wrap up the week, we are going to hear from American Express, Whirlpool, as they report earnings, and that really covers it, everybody. Those are the main breaking events on Wall Street starting next week. Now, here's the main two. If you could just take away two things this week. Number one, it's going to be on Wednesday. The Federal Reserve Bank releases the Beige Book on current economic conditions. And number two is the National Association of Realtors as they release their existing home sales. And then I would say Tesla's earnings. So Tesla's reporting earnings, because if you think about the S&P 500, it is a market capitalization weighted index. And I think Tesla makes up number 5. I think it's almost 2% of the entire index. So if Tesla misses on earnings, I think Tesla could be down big. And if you're following me on Twitter, if you follow @WalksWallStreet, I posted a series of charts. I think Tesla is carving out a very, very bearish head and shoulders top. So if they report badly on their earnings, I think that thing is going to blow wide open, and I think it's going to drag the rest of the market down with it. So just be aware of that. So this ball right here is the New Year's Eve in Times Square, where they drop it, New Year's. Zach Drew's circuit breaker day. Well, I think maybe to play devil's advocate, I think we just hit an all-time record high for hedge funds positioned short. So potentially, maybe a potential for a short squeeze, maybe. We'll see. But this market is very, very sick. All of the major leaders are well below their 250-day moving averages. And, as Paul Tudor Jones, Stanley Druckenmiller says, nothing good ever happens below the 50-day. So there's two things that I live by. Nothing good ever happens below the 50-day, and nothing good ever happens on 8th Avenue between 34th Street and 42nd. Those are the two biggest takeaways. Yeah, Miguel, hey, good to see you. Miguel is like the EV credit. So I think a lot of the automakers are going to be helped by the new bill that was just passed by the Biden administration, the Inflation Reduction Act, that has a lot of EV subsidies and credits. So I think that may be a longer term catalyst, but I think a lot of that stuff is already priced in. In the back of my mind, everybody, I'm still trying to think of a classic U.S. men's national team player to mention. I'll think of one where you're going to be like, oh my gosh, I remember. I think I already said Eddie Pope. Eddie Johnson was a very good one. Eddie Johnson, if anyone remembers him. Somebody says, what is my take on crypto? So I think I've said this before, but we do have a lot of newer people. In my view, I think a lot of these alternative altcoins are going to be classified as securities by the SEC or by Gary Gensler. So I do not own any of that stuff. I do have exposure to Bitcoin. And the only reason why I have exposure to Bitcoin is, we got to turn down here, is because as I was looking at Bitcoin, I said, you know what? I think it's appropriate for me. What I find attractive about Bitcoin is that it's unconfiscatable, right? Now notice how I didn't say that I think it's going to go to 1 million and I'm speculating on the price. I think for me, I think it has value that I could have a portion of my net worth, right? Maybe that's 1 to 5% in a particular asset that is truly unconfiscatable. Meaning that if I memorize my private keys, no government entity, no criminal could ever have access to that particular portion of my wealth. Now, if you're thinking about it like a portfolio manager, let's say if you allocate, 2% of your net worth to Bitcoin, Well, when the price drops, it's going to throw your allocation out of whack, so you would add to the position. And then during bull markets, as the price is going up, it's going to take your 2% allocation maybe to a 6%, in which case you would have to trim back to that 2%. So for me, I won't give out the exact percentage that I invest into it, and you guys should not, buy something just because I own it. I'm just giving you my personal opinion on something. I'm not giving advice. This is Joe's Pizza, by the way. They just opened up a location in Miami, Florida. I'm attracted to Bitcoin's unconfiscatable properties. Now, could Bitcoin be a failed project, and maybe there's like a central bank digital currency that comes out and governments make Bitcoin illegal? Yeah, that's possible. But that's sort of the calculated risk I take, right? And as an adult, I understand that risk. But in my personal opinion, I think these alternative cryptos, I think there's like 2,500 of them, I would stay away from those, because I think there's going to be a lot of legal ramifications, because from my limited knowledge of securities law, I would classify the vast majority of these altcoins as securities, right? You have a lot of entrepreneurs that issue these tokens to people, investors, and you're pretty much soliciting unlicensed securities. Now, I could be wrong. Again, this is just my personal take on it. Maybe I'm wrong, and I could be wrong. But it's just a little bit out of my risk tolerance there to get involved with the altcoins. Also, I think that there's a lot of fraud involved in the altcoins. I think a lot of these projects are sort of set up like MLM type pyramid style Ponzi schemes that I think a lot of consumers should probably stay away from. But again, this is my opinion. Doesn't mean I'm right. Doesn't mean I'm wrong. But that is my stance on it. Dan Zang says, what happened to Luna? Yeah, I think that was, and again, I want to use the term allegedly, but I think that was a big Ponzi scheme. But here's the good news. I'll give you guys the good news. If the SEC or Gary Gensler's organization just comes out with some regulatory clarity in relation to cryptocurrencies, all of this nonsense would stop. And I think real smart individuals could continue to work on different projects and build in the Web3 or whatever you want to call it environment. But I think there needs to be regulatory clarity on it, because if there's not, then it's essentially you're playing in shark-infested waters. So I think the SEC chairman, Gary Gensler, is also to blame. And I think the SEC needs to do a better job with regulating. But I think once they do, then it's going to be a good time for risk on. And I think pretty aggressive risk on. All right, team. My phone is going to die, and I want to thank you all for coming out to the live stream tonight, our Markets Look Ahead stream. We will be live tomorrow, 8:30 p.m. Eastern Time, live from New York. I want to thank everybody for coming out. Teresa Diaz, the investigator. Rob, thank you. Gott, Marcelo Gill, Zach Drew, Deep Value Alex. I want everybody to have a successful and prosperous week ahead. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. So if you guys are new to the live stream, feel free to hit the subscribe button, leave a like on the video. If you're interested in hearing more of my thoughts and compiled thoughts from the live streams, if you scan the QR code, punch in your email, I do write a free investing newsletter where we cover the US equity markets, emerging markets, fixed income. Thank you everybody in the chat for participating. I think we had a lot of good discussion. I learned a lot. I think you guys put a ton of effort into the chat, which I appreciate. So MK, thank you. Abdullah, Sam, Razi, Cynthia Beal, Love is Kind, MC, Muhammad, Sean, thank you so much. Ninja, all of our moderators. We will see you in the next one. I gotta go get like a tea or something like that. Take it easy, everybody. Have a great weekend. Great week ahead. And we'll see you back here tomorrow. Take it easy.